On Friday, we had one of the biggest economic surprises that we've ever seen. And that news capped off another stellar week for the US markets. In this week's video, we're going to cover what the news was from Friday, an index that broke out to all-time highs, and also some news events that could move the markets in the upcoming weeks.
The S&P 500 had its best week in 8 weeks last week as it was up almost 5%. And now the S&P 500 is up over 43% from the March 23rd lows. And the S&P also is about 1% away from breaking even on the year and only about 6% away from the all-time highs. The surprise news came on Friday with the jobs report. And 2.5 million jobs were added last month versus 7.5 million that were expected to be lost. Now that's good news for investors because it seems like the economy is opening up and getting back to normal sooner than expected. The final takeaway from last week is that the Russell 2000 led the way. It was up over 8%. Now this is the second week in a row that the Russell 2000 outperformed the Nasdaq, which has been the leader over the past year and a half. Now that means that investors are feeling more comfortable with small cap companies and more aggressive stocks, such as the ones that are in the Russell 2000. Foreign and emerging markets both had stellar weeks as well, with foreign markets up over 7%, while the emerging markets were up over 8%. And the first time I've been able to say this for a while is that now both foreign and emerging markets are only down single digits for the year.
Let's jump right into it here. First and foremost, the Nasdaq has made a new all-time high. At the end of last week, we were able to break above the resistance zone from back in February. A lot of people were watching this area and talking about a potential double top. We were really watching to see if this would fail here and fall lower. That would have been a very bad move here for the bulls. However, we made that fresh breakout to new all-time highs last week. If we can hold over this level here for this week, that would be a very, very good sign for the bulls moving forward. And also, when we start taking a look at what had been a major lagger here for quite some time, the Russell, we are noticing it is finally getting some follow through here to the upside. That major resistance zone that we were watching was the support area from last year. It was also the support area from the first test in March before we ultimately made that breakdown right in here, and that was 1450. We have cleanly got up above that, and now we're almost 100 points higher. We have a last little bit of resistance right here at about that 1540, and then it's really smooth sailing all the way back up here into that 1600 zone where we fell from at the beginning of this year. So very, very strong move here out of the Russell, which is a very good sign because we are seeing that risk on mentality and a little bit of a rotation here into some of the smaller stocks, which is a good sign.
One of the things that we're going to be watching closely this week is the Fed meeting on Wednesday. And the big topic of discussion is going to be, are they going to take any further steps for economic stimulus due to the coronavirus? Now, after Friday's jobs numbers, many analysts are worried that the Fed is not going to continue their stimulus plans because the jobs numbers were just too good. Now, we fully expect the Fed to continue its liquidity program to help support the bond markets, but we don't really know if there's going to be any additional funding coming in for small businesses or medium-sized businesses. And make no mistake about it, the Fed spending has been directly correlated with stock market performance for years now. And the Fed already has a staggering $7 trillion on their balance sheet. And I'm not really sure how much more they can handle. Another thing that the Fed, I'm sure, is watching closely is the high delinquency rate amongst mortgage-backed securities. The delinquency rate jumped from 2.29% to 7.15% in May. That essentially means that 7% of people in America aren't paying their mortgage payments, and that's both commercial and personal. To go even further, the retail sector is being hit even harder. Their delinquency rate is around 10% for the month of May. And the third largest mall real estate investment trust didn't make their last dividend payment. And if they don't make their payment within 30 days, they will be in default. If you remember, mortgage-backed securities were made famous during the 2008 financial crisis. So the Fed has a huge decision to make on Wednesday. Thanks for watching. If you find this content valuable, please subscribe to our channel and follow us on Facebook.